What is going on, guys and girls? Good morning, good evening, good afternoon. Welcome back to the channel. And in today's video, we are going to be breaking down why most traders are profitable one week and broke the next, and the exact reasoning why. It's actually much simpler than you might think it will be. And in this video, by the end of this video, I'm going to break down and hopefully provide some value to you as to what you can do to refine your approach and sharpen your sword a little bit to stop your trading success going like this. Profitable one week, losing it the next. Profitable one week, losing it the next. So with that being said, let's get straight into it. So profitable one week and then broke the next. Here is why. Now, a good week doesn't mean that you have an edge. There is a lot of traders on Instagram promoting the fact that every week is a profitable week and having a couple of winning trades is the be all and end all of the world. This is clickbait bullshit. It doesn't work. Most of it's lies. A good week doesn't show you anything. It might just mean that the market moved in your direction. Maybe you got lucky. The traders who confuse a lucky streak with a repeatable edge are the ones who give it all back the following week. And you can see that in the crypto markets. Every crypto influencer on Twitter has spent the last 4 months giving back all of their profit because they got lucky last year. And this year's been range-bound, choppy conditions, and everybody has given back all of their profit. The difference between luck and having a real edge. Luck is when the market does what you thought it was going to do. A real edge is when your process produces consistent results over time. I'm going to say that again. Your process produces consistent results. Doesn't mean that you take 100% of your trades, which are winning trades. It means that you take losses, but your process is consistent and your results are consistent. 3 winning trades in a row shows you absolutely nothing. Doesn't tell you shit. 50 trades with documented reasoning inside your journal with screenshots, entry, exit, management, criteria, all explained clearly in detail so that in 6 months' time, we can go back and have a look at that and we can see exactly what you were thinking about that day. 50 documented trades with reasoning starts to show you something, starts to prove something. You cannot know if you have an edge without a large enough sample size. Most traders never get there because they keep changing the system. They strategy hop. They move between different time frames. They enter on the 4 hour, then they enter on the 5 minute. They move their stop loss. They're trying to manage a day trade like a swing trade or trying to manage a swing trade like a day trade. So they change. They change the system. This means that you're measuring the wrong thing. So most traders will measure success by whether you made money this week. Did I make money this week? Yes or no? If I made money, I'm a winner. If I didn't make money, I'm a loser. It's outcome thinking. It means you're result reliant. It means that if you didn't make money, the whole thing's cooked. I'm a loser. I'm a brokey. That's not true. Some weeks you're going to lose money. You can have a bad week, but you can still finish on a good month. Professional risk managers and traders measure success by whether they followed their process. And the money is a byproduct of you following that process day in, day out, like I always say in these videos, like a military exercise, like a Navy SEAL. Why a good week often causes the next bad one? Because you get a bit excited. Everyone's had it. Big trading week, 5K, 10K, 100K, 200K, million. You get a bit cocky. You get a bit overconfident. That confidence after a winning streak turns into overconfidence. You start taking setups you would normally pass on. Yeah, but I'm up 50 grand. I'm up 10 grand. I've got a buffer. I can afford to take it. I can afford to break my rules. Your position sizing then starts to creep up because you've got a buffer, you've got money to burn, you've got money to lose. The process starts to get a bit shaky, gets a bit loose, gets some holes in it. You're not trading your system anymore. You're trading your ego. And your ego's been inflated a little bit because you've had a win. One bad trade under inflated size erases your whole week. I doubled my risk on this one and I had my stop placed incorrectly and I just gave back all my profit. Then the revenge cycle starts. And then you go from, hang on, what happened here? On Tuesday, Wednesday, I was up 5R on the week and I was feeling great and I've just finished the week down. I'm net down for the week. And these last few trades aren't that clean. Okay, cool. It's because last week you had a great week, started off this week really well, and then gave it all back because you broke your system. You're not repeating your consistent process. You're changing stuff. You're moving things. You're over-risking. The revenge cycle. The habits that kill your consistency as a trader. If you trade outside your defined sessions or markets, then it's not in your plan. If it's not in your plan, then it's not a trade. And if it's not a trade, you're not taking it because it's a gamble. So if you say, hey, my style is that I trade Asia Open and I'm looking to trade between 8 and 11 a.m. every morning, and you've got 3 trades in your journal at the end of the month in the New York session, what are you doing? Those 3 trades, how do they go? Well, they were all losers. Oh, that's interesting. They're not in your trading plan. You're not supposed to be taking them anyway. Why are you trading the New York Open? It's currently got a 0% strike rate for you. Skipping the pre-trade checklist when you feel confident. We've all done it. This is the one. This is it. I'm on a hot streak. I don't need to check for this, this, and this. Do I have a break and retest? Do I have confirmation? Do I have candlestick? Do I have a candlestick rejection at the area I want to see? Can I get my minimum risk to reward before the next trouble area? Etc. 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 Skip all that. Looks good. I'm taking it. I'm on my phone. Maybe I'm in the car. Bang. Confidence is exactly when your checklist and your pre-trade criteria is more important than ever before. And lastly, not recording your trades because it was a small position is a sure way to screw up your journaling process. Small positions reveal the same habits as your large ones, because if you're repeating your process and you're staying consistent in your approach, then naturally all of your positions are going to be the same. They're going to be managed the same. They're going to be entered the same. They're going to be sized the same. They're going to have a similar TP and SL criteria. Therefore, you should be keeping a log of all of them. Not everybody wants to see your 6R trade. If you take 6 1R trades with 100% strike rate, that's of interest. Not everybody wants to see the Hail Marys. Not documenting your small trades is leaving yourself short. Consistency in trading is boring. If you've spoken to any traders, any full-time traders who actually know what they're doing and know what they're talking about, they will tell you that trading is boring. Why? Because it's consistent. It's repeatable. It's the same process. Same position sizing, same criteria, same entry. Every single session, whether you're up on the week or down, you're literally executing like a robot. It's a military exercise. It becomes repetitive. The traders who make money every month are not more excited on good weeks. They're the same. Their emotional fluctuations tend to do this. Instead of retail traders and newbies, they do this. Good week, bad week. Good week, bad week. Making money, losing money. Making money, losing money. A professional risk manager stays balanced. It doesn't matter whether it's a winning week or a losing week. And that can be quite hard to come to terms with if you're a bit earlier on in your journey, but consistency gets results. Consistency is boring, but it gets results. The habits that build consistency over time. At the end of every single week, every week, with no exceptions, you should be journaling your trades. What did you follow? What did you override? Did I follow my rules this week? If I didn't follow my rules this week, why? What happened? Why did I break my rules? What rule did I break? Have I broken this rule before? Why do I keep breaking this rule? Track your process, not just your P&L. Did I execute my trading plan? I don't care if you had a winning week or a losing week. Did I execute my trading plan flawlessly? Yes or no? That's it. If no, why not? If yes, cool. Happy days. How did I go? Well, I had a couple losing trades. That's okay. I followed my plan. Cool. Patterns in your overrides are patterns in your losses. I'll say that again. You need to fix your behavior there. Patterns in your overrides in your trading plan will show me the patterns in your losing trades. They're going to be the same. The question is are you self-aware enough to go and look for them? If you fix your behavior, the results will fix themselves, because the problem is not your trading plan. The problem is the gap between you reading it and executing it. And that means the onus on that and the ownership of it is on you, which also means you're the solution to the problem. Drawdown is not a sign that the strategy is broken. Every profitable strategy has losing periods. I've said this in a previous video. The most losses I ever took was 11 trades in a row, and I was risking 1% of my account. So I was down 11%, 11 losing trades. And I think it spanned from memory over, it was more than a month. I think it was about 6 weeks. Couldn't take a winning trade. If I'm over risking, account's gone. If I start to change my strategy, I don't give it a chance to prove itself and turn profitable again. Inconsistent traders quit their strategy during a drawdown and they hop around. Consistent traders know their maximum historical drawdown. Mine was 11 losing trades in a row, right? The question is whether you have enough data to know what yours is. Can you tell me? Do you know? Do you just strategy hop every time you take a losing trade? If you don't know your strategy's drawdown profile, homework task, go and find out. What's my drawdown like? How much can I be exposed to here? Is it that in choppy markets, my strategy doesn't perform as well and I'm more likely to take losing trades and my strike rate starts to drop? Okay, it's just data. Tell me the data. That number is what will keep you in the game when it gets difficult. So me now, when I take losing trades, I haven't had 11 losing trades in a row since, but that's kind of my benchmark. That's how I know that, yeah, well, actually, I can't over risk. Because if I was risking, too much on my account, 11 losing trades, you start to get a tight bum hole. You start to get nervous. Because if you're 50% down on your account, you make emotional decisions. Whereas if you're capping your risk profile, 11%, it's a haircut, but it's not the end of the world. How to turn your losing streaks into a repeatable edge. Define your strategy rules so clearly that a stranger could follow them. You should be able to pick up your trading plan, give it to somebody else, and have them follow it without asking you any questions. If they can't do that, your strategy is not clear enough, you haven't defined it well enough for yourself, and therefore, how do you expect to follow it? If somebody else can't follow it, how can you follow it? If it's in your head and it's not on paper, it is not a system. Your trading plan needs to be a system, a repeatable system, and a very clear to understand system. Trade the same markets, the same sessions, the same timeframes, the same entry criteria, the same stop loss placement, the same take profit target, the same trade management once you're in the position, the same metric for whether you'll scale into positions. Same. Repeatable. Consistency of environment produces consistency of results. Trading is a psychologically difficult game. Do not make it harder than it needs to be. Make it easy for yourself. Make it easy to follow and repeat. Log every trade, review it every week, and adjust only when you've got the data. Hey, in the last 3 months, I've noticed that my New York session trading has a much lower strike rate because I have to keep removing risk, bulletproofing it, and going to sleep because that's when my bedtime is. And I've noticed that 78% of those trades have me tagged out for break even. Whereas if I'd closed them manually before I went to bed and seen that as the end of my session, I'd be up 16.2% in the last 6 months, etc., right? 60 trades minimum before you consider changing anything. Realistically, depending on the frequency of trading that you're doing, you probably need 3 to 6 months worth of data before you change anything. If that's 60 trades and you're doing that in 6 months, cool. If it's 6 months and you only take 4 trades a month, you might have to combine that with a bit of back testing. If you want consistency built into your process, QT, Quantum Traders, my mechanical trading community. It is a framework for consistent mechanical execution. No guessing, no ideas. It is literally structure. It's a repeatable process, and it's a process that works for you. Not my style, not copy me, no signals, none of that bullshit. None of that works. It's all clickbait. You need a framework for yourself that is easy to follow, repeatable, that you can understand, and that you can execute on day in, day out. We've got 5 weekly market webinars, crypto, metals, FX, all of it. If it's a market and it moves, we're trading it. Risk management is built around that repeatable process. We've got one-to-one coaching available. We've got our community access through ProTrader. As always, I will put some of those links in the description below this video. And I hope this video is valuable. I hope that you've taken something from this video in regards to your own psychological limitations. What's happening in your trade process, pre, during, and post. Are you executing on your plan? Are you changing things? If so, why? Are you journaling? If not, why not? These are questions you should be asking yourself. And if you don't know the answer to those questions, this is a good place to start. And if you need help doing this, then obviously you know where we are. But I've given some source in this video that if you took this and implemented into your trading, you would improve. So with that being said, that's all from me this week. I will leave you with this. Profitable weeks are very nice. A profitable process is everything. Keep it mechanical, and I will see you guys in the next video. Take care.